used to have a tie. Oops. There you go. So, good evening, everybody, and really excited to have this fantastic panel tonight. And one of the things that you're going to find out about these great entrepreneurs that you're going to be hearing from is they are super humble. So I am going to do some bragging on these folks as we go into it, because they're not going to tell you what rock stars they are in their field. But I wanted to go ahead and have each of them sort of introduce themselves and tell a little bit about your story. So I'm going to start with Jamie. So you may want to unmute Jamie at the bottom here of the screen. But this is Jamie Wunder. She's the co-CEO and co-founder of OS National. So Jamie, tell us about yourself and your company, and give us a little background for the audience here, and then we'll kind of go through everyone else also.
Okay, great. Hi, everybody. I'm super excited to be here with you today. As Tom said, my name is Jamie Wunder, and I'm a co-founder and co-CEO at a company called OS National. For those of you who don't know, OS National is a financial services company, and we focus on title and escrow services for real estate. So my story, basically, after I graduated from law school in 2006, I joined a law firm. The law firm's focus was primarily in real estate, and that's where I also met my future partner, who I would later co-found OS National with. So about a year after starting at the law firm, I had an idea to expand the firm's offerings from consumer products and services to enterprise products and services. I partnered up with a colleague at the firm, and we built out a very successful practice focused on those solutions for residential real estate. Our clients at the time were mainly large institutional banks, and those customers at that time were pressing on us pretty hard to expand geographically, because at that time we were only offering services in Georgia. And as we were doing that, we realized we didn't have to be a law firm in most of the country to do what we were doing, and we could offer even more services if we started a new business. And that was the birth of OS National. So that was 2012. And because of the work we had done at the law firm and for those banks, private equity firms began to hear about the work we had done and started to reach out to us to help them with their real estate needs. And we continued to build original new products for those customers. And it was because of that work that we were later introduced to Opendoor, who some of you may or may not be familiar with. For those of you who aren't familiar, Opendoor is a tech company out of San Francisco. They went public earlier this year, and our mission is to empower everybody with the freedom to move. We began working with them around 2015, and in 2019, we agreed to join the Opendoor family and sold the business to them. So OS National is now a wholly owned subsidiary of Opendoor, and they asked my partner and myself to stay on as the co-CEOs, and I'm here now with you all today.
Thanks, Jamie. And she, again, is being super humble. I mean, she literally created a niche in this market with OS National between she and Charles, who we're great friends with too. So thanks, Jamie. We'll come back to you. So Anil, you've got a very different background, right? You're at Cognizant now. You were in government. Tell us a little bit about your story, because it's really, really a unique and cool story.
Yeah, so thanks, Tom. Thanks for having me. Great to be here. I'm Anil Cheriyan. I'm the EVP and CTO at Cognizant. Cognizant, for those of you who don't know, is about a $17-18 billion professional services firm. It's global and so on. My responsibilities there are strategy and partnerships and business development in terms of the acquisitions and so on that we do. And also I manage all of the technology within the firm. So that's, I've been there about a year, many years in consulting before. I started off in PricewaterhouseCoopers, actually Coopers and Lybrand, PwC, and became IBM, and ran lots of practices and grew them. Then I became the CIO at SunTrust, where I really got SunTrust, as most of you know, in Atlanta, the bank in Atlanta, ran all the technology and operations there. Really got involved in a lot of the startup environment and did a lot of work with VC firms in terms of identifying companies that we want to either acquire or partner with or work with or invest in. And in fact, we made a few acquisitions in consumer lending and mortgage and so on. So it really started getting engaged with a lot of our private equity and VC firms. I retired from the bank and then started my own advisory services, where I was really helping a lot of what I call late stage growth startups in their ability to scale up and really exit, right? So some significant amount of experience there. Then spent 2 years in the White House doing technology transformation for the federal government, which is a whole other story. So, but now I'm in Cognizant and happy to be here.
Yeah. Well, thanks, Anil. And I really wish we were in person so we could have a beer and just talk about the White House years. I mean, I'm dying to hear some great stories from you on that. So we'll do that another time. But so Evan, I'm sitting here looking at your clothing online. Tell us a little bit about your story and how you're here with us with Ty today.
Yeah, Tom, thanks for having me today, and to Ty for having me today. I went to Georgia Tech, so I've been in Atlanta for a very long time. I have an industrial engineering degree that I never specifically used. After college, I worked for Anderson Consulting, which exposed me to some really big companies and how they worked, but I was far more of an entrepreneur than that. My father and my grandfather were in the apparel manufacturing business, and a friend of mine had started a t-shirt company in college that he wanted to make more out of when he left college. So I liked what he was doing. He had more fun than I was having. So I bought into that business with him, and over a 20-year period, we grew that brand, Alternative Apparel, to about 150 employees and 70 million in sales. We had our own stores. We sold through Nordstrom, Bloomingdale's, Urban Outfitters, and we sold through one division to companies that would put their logos on there, and the product would be used for band merchandise or uniforms or corporate wear. But Hanes ended up buying our company in 2017. Halfway down that path, though, we needed growth capital, and we wanted to actually take some of our chips off the table. We brought on an investor, what's called a minority recap. A private equity company invested in our company, but bought less than half of it. And the banker who did that deal is actually a Thai member and on the call today, Alex Mammon. Alex and I stayed in touch through all those years, and after selling to Hanes and staying along through a transition, I'm now investing in and advising companies with Alex at Heritage Growth Partners. Similar model. We buy a meaningful stake in companies, but we don't think we know more than those that started them. So we really invest alongside them and invest in the entrepreneur. And I love that about this organization too, that it supports entrepreneurs. I'm passionate about that.
Cool, thanks, Evan. So I want to continue on that topic because you just mentioned a minority recap. So I know I'm probably jumping right into the pool here, but I think a lot of people don't know that strategy. Can you talk a little bit about that strategy, what you thought about it? And you hit on something really important, because when you think of private equity, I think a lot of people out there hear horror stories about, the big bad, private equity firm coming in, telling you what to do, and then owning a majority of your company. But you mentioned a minority stake. So can you talk a little bit about that decision-making process, how you came to that, and why that was attractive to you?
Yeah, sure. And I qualify everything with saying I only know what I know, but that model worked really well for me and my business. And I think it would be great for entrepreneurs seeking some sort of exit. I mean, an exit could be three ways, in my opinion. Sell it all, sell most of it, which is the typical private equity model. They may let you stay in for another 20 or 30%, but they want control, or sell less than half. That's a minority recap. You're going to get expertise. I mean, I can be proud of the way we do it. We will fill in holes on your management team that you may not have. You're going to have another thought leader at the table with you. And you will get capital. Some of it may be used to exit a retiring partner or someone no longer active in the business. Some of it may just allow you to diversify your personal wealth. But most importantly, you're getting a true partner, because you're going to have to work together to build the business. And I think that's an excellent way to go for someone who's not quite yet ready or of the age or burned out fully to exit off into the sunset, and they think their business has a lot of room to grow. That's where a minority recap can be a good exit decision.
Nice. So I'm going to pivot to Anil, because Anil's got an enterprise view, right? So he's on that side of the table as well as Evan now. So Anil, tell me a little bit about, from an enterprise viewpoint, you're looking at, what are you looking for as you're out there looking for deals? Because I think you had mentioned you had done, I think, 23 acquisitions. I may have gotten that number wrong, just in the last 12 months. So talk a little bit about, what you're looking for and what, because people may be wanting to work directly with a buyer like yourself.
Yeah, no, we're really looking at the technology marketplace. We're in that space. That's what we do. We have 300,000 employees across the globe, and that's where their focus. As you know, every one of our clients in the Global 2000 are looking to go through a digital transformation. And so we've identified 4 battleground areas: digital engineering, AI and data, IoT, as well as the whole cloud migration marketplace. And so when we look at companies to buy, we look at their capabilities in those 4 areas in the industries that we're in, right? So it's a combination of those fundamental digital transformation capabilities and the ability to actually do that in the financial services industry or healthcare and so on. So we've got a pretty good M&A team. They're focused on that, and we're actively scouring the market. And we had a couple of acquisitions just recently in Atlanta. Tin Roof was one, and some others. So it's a hot market for us, and it's a good way for us to keep building our capabilities.
Gotcha. Great. And so, Jamie, I'm going to ask you this question. When did you know it was time to pull the trigger and sell? I know your situation a little bit more, but yeah, tell us a little bit about that decision-making process and how that transpired and what made you move forward with it.
Yeah, so for us, we actually weren't looking for an exit. We were really happy doing what we were doing. The company was really successful. We were growing, and we really enjoyed it. We didn't want to exit. But what happened was we started working with Opendoor in 2015 as a customer. They were a customer of ours. And as we developed that relationship, we got to learn a lot about them and their vision and their mission. There were a lot of synergies between the 2 companies. They had a tech piece that we really wanted, and we have a part of the transaction that that was really attractive to them. But mostly, I would say it was, Eric, the CEO, his vision. My partner and I, we believe in it. We believe in what they're doing, and we want to be a part of that. And we want to be a part of transforming sort of the way people think about moving in real estate, all of that. And so when we decided we wanted to be a part of that and not be passive, this transformation that Anil is talking about, it's going to every industry, right? Nobody's really immune from it. And do you want to be a passive participant to it, or do you want to be a part of the change? And so we decided we wanted to be a part of it. And I would say it was that combination of that, also the people there, like the people at Opendoor were some of the smartest, just good people we had ever met. We were really aligned from a values perspective on the 2 companies. And so we care tremendously about our people and our team, and we weren't going to sell it in a way where the people weren't going to be thought about. So that was really important to us. So all those things kind of came together. It was the right partner, the right vision, the right sort of horsepower we could both provide to one another, and we couldn't think of a reason to not do it when they approached us. We tried. We did try. We went through it, and we couldn't think of one. So that was our decision.
Gotcha. So I'm going to ask each of you the same question here. So if you want to think about it, what is one misstep that if you could do it over and you could give someone in the audience today something, just sort of a heads up, keep this in mind, what would you tell them? And then Anil, for you on the acquisition side, maybe what you've observed, from someone selling to you. So I'll start with Jamie. Go ahead.
So I think it's really important to have a really good team around you, and to not try to do this yourself if you're going to do it. That was a great piece of advice we got, but I think one of the things I wish I could do over is be more selective on the partners. I would say for us, our team consisted of an investment banker, and it also consisted of a legal team. And the legal team was a really great choice. I would say we maybe should have gone through a couple more references on the investment banking side. But that would be the one thing is know who your team is, trust them, and be really confident in what they can do for you and how they can protect you.
So I'm going to follow up on that real quick before we go to Anil on that same question is, so you got an unsolicited offer, but yet you still hired a banker. So talk a little bit about that.
Yeah, so we did that. My partner and I have a lot of friends that we know in different industries and businesses that have gone through M&A transactions. And so we reached out to talk to people who had been there before, either from an enterprise level like Anil or from an entrepreneurial level. And the one thing they all told us was, make sure you get a good investment banker, make sure you get a good legal team. And we got some resources. You don't want to be in the middle of those negotiations. A lot of times, certain deal terms can become very emotional, especially for founders. And so it's good to have sort of that intermediary who can play bad guy for you, especially if you're looking to work with these people after the fact and you're not exiting. So that was a really good reason to have sort of that banker in between.
Sure. No, that's great. Thanks, Jamie. Anil, same question to you. I mean, when you're interacting with a founder, right? What are some things that maybe you've noticed that you would recommend that sellers do a little bit differently when dealing with you?
Yeah, I think there's just 2 points of view. One is actually in the acquisition side, and also on the side of my providing advice to some of these firms before they went through the exit. I think there's a thing here about how a founder, this is the founder's baby, right? And the founders really created it. And there's a lot of good, bad, and ugly things in everything that's going on. So the founder really needs to figure out get the right advice from the right people who can be very honest with them about what their capabilities are and what their missteps are, what their issues are. And some founders are just, this is my baby and I know everything and I'm going to keep track of it. And they really don't know how to delegate or offload some of those thought processes. I agree with Jamie that, you got to do it with the right people, with the right culture, because you can't do it with, building that team where you all have the ability to have honest disagreements is really critical to make that happen. But I could go on and on. There are lots of horror stories. So,
no, that's great. Evan, same question to you. What is something that maybe you would go back and redo, or something you would pass along to our audience that would be helpful?
Yeah, no problem. I would say a year or two before you're even contemplating selling, this is really important. Don't make any decisions that are short-term in nature and that are just to pump up your business and sell it. I mean, the time that your business will be most valuable to someone else will be when it's most valuable to you. And to have an alternative to saying yes to an acquire puts you in the greatest position to find the best partner and reach the highest value. So too many people get caught up in hypotheticals. Maybe they start counting their money too quickly and they make moves that set themselves up to sell. I don't think that's a way to go about it. I think you've got to continue to think long-term. Nobody really is buying your company for what you did. They're buying your company for what they can do with it. And it's important that your brand and your company stay on that path, long after you may be gone.
Yeah.
Can I just add one thing, Tom? I'm sorry.
Yeah, go ahead.
I just said something that maybe, one of the best pieces of advice, another great piece of advice we got when we were going through it is don't get distracted from the business, and don't let your team get distracted from the business, the ones who are working on it. Because it's really easy, especially in the smaller organizations where you have a lot of people wearing a lot of different hats, is you focus on the deal and you're not focused on the business. And then all of a sudden the business starts suffering because of it. And you don't want that to happen, especially in the middle of one of these transactions.
Right. No, that's great. And so I'll ask this question too. What was it like interfacing with a big enterprise for Jamie and Evan? I'll throw that out to you all, right? Because Jamie, I mean, you were basically negotiating with some pretty big hitters in the Valley, right? These people have a PhD in doing this. So talk a little bit about that experience and what it was like.
Yeah, so again, a good reason to have the investment banking team there who had that experience, because we were negotiating, you know, with ex-TPG, Goldman, prior CFO from Uber, and so definitely having that layer in between us was really, really helpful.
Yeah. And did you, and Evan, same for you. I mean, did you interact a little bit with Haynes? Did you have a consulting agreement? Can you talk a little bit about how that's structured for you when you exited?
I mean, I'll even go back to our first deal where we brought in a private equity company. You know, it's very gratifying to be on that kind of radar. They were the original investors in Under Armour. And to see them take notice of us, you know, you've got these mixed feelings. You've got to be on your game on one hand. On the other hand, you've got a lot of pride about the, you know, the attractiveness of a business you've built. Haynes invented the t-shirt business we lived in. So it was just exciting. I enjoyed the process. Of course, we had all of the professionals around us to keep us squared away, but I used it it was a fun time in my career to go through that process.
Yeah, no, it's great. And then, you know, as far as like a family office situation, right? Tell the audience a little bit maybe about the difference between that and a private equity firm, because we're starting to see a lot more family offices like Heritage, you know, come out of nowhere. Well, I shouldn't say nowhere, but they're really rising up to be players in this industry, in this ecosystem. Can you talk a little bit about that?
Yeah, sure. I knew that when I exited, I wanted to do more advisory work and investing in other companies. And, you know, I loved Alex had founded Heritage Growth back in 2014, and I liked how he had approached it, not just by making meaningful stakes, but minority, you know, less than majority stakes, but running it as a family office. So Alex and I will be the lead investors in every deal. It's our capital. Most private equity businesses, those executives at private equity firms, they make money transactionally. They're not really putting their money at stake the way a family office will. The other thing that you'll find with a family office is that it's more patient capital. They don't have the kind of the timetable. If you raise a fund, your passive investors expect a return in a few years, 3 to 5 years. If you have a business that's cash flowing well through a family office, you're willing to take distributions. You're willing to just go along for the ride for a long time. So I think patient capital and the experience of people that have actually built businesses themselves, you know, versus those that have just handled many transactions sets that model apart.
Yeah, no, I love it. That's great, Evan. You know, Anil, can you talk, going back to your mentorship of the companies that you're working with? You know, how many companies are those, and what are you working on with those folks as you guide them through their life cycle right now? Because you say early stage startup, and I kind of chuckle inside because, you know, you're dealing with and mentoring companies in that 5, 10 to 20 million and plus space. And for a lot of people, that's, you know, a little bit beyond the startup phase. So talk a little bit about what you're dealing with when you're mentoring these folks and getting them ready. Are you thinking exit and working backwards, or is it just, you know, let's grow this thing?
Yeah, the firms that I have been mentoring right now, there are about 4 that I'm working with. They're what I call late stage growth firms. They're probably in the 20 to 25 million range, and then they are looking to grow to be about 100, and that's where the exit typically happens. It's about 100 million, or maybe, you know, get to 150. So, you know, I've been working with the CEO and other advisors, as well as their board and their investors. That's usually how I get brought in, is through the VC firms in terms of helping them. But it's about you know, are they structured appropriately? Do they really understand their TAM? Do they really know who their clients are? Do they really know, you know, have they built the right team? Have they built the right culture? You know, there's aspects of the different channels by which you can go to market. The business that we're in, and I'm sure most people are in, is this whole ecosystem that you're working with really enables a lot of the sales and a lot of the leads and so on. So those firms, have they built the right ecosystem and partnerships? Is a critical aspect of it. So those are the kinds of things that I don't get too deep into the product itself. There are lots of other people who can do that. My whole game plan is about the structure and the go-to-market side, and are they really focused on the right things in terms of scaling up? Yeah, how do you get from 20 to 100, right? That's really the focus.
Just a quick question. Out of the 23 acquisitions you've done in the last year, how many had representation? How many didn't? Or maybe a percentage or something like that?
I don't know exactly the percentages, but I'd say the majority had representation.
Okay.
The majority had representation. And we advise them also to get representation, because you really don't want to, one, you get the right deal structures. Two, you get the pace at which you want to move. You get certain clarity on data requests. I mean, there's a whole bunch of things that really work better if you've got good representation.
Gotcha. And I'm going to follow that up and kind of go back around to Evan and Jamie too on, let's talk the big elephant in the room, valuation and expectations, right? Some people always think, that it's a multiple of EBITDA. Some people, I talk to, are like, well, it really should be a multiple of revenue, right? How do you look at it? Is it company specific? Talk a little bit about that to try to set expectations for people in the audience.
Evan, do you want to go first? Oh.
Whoever wants to jump in. Sorry, I didn't direct it at somebody.
Jamie can go first. I'll go after.
I think it's more market specific, and from my view, my space in the financial services space, especially, that's sort of set that the multiples are traded in a certain way, especially in the title and escrow business. So I would say it's really market driven from my perspective.
Okay.
Yeah, and again, going back to I know what I know, but in the manufacturing, distribution, consumer product space, I've seen companies mainly valued based on a multiple of their EBITDA or their earnings. So the tech companies are going to get the multiples on sales, but businesses that we invest in are already earning $3 million plus in earnings. They're beyond kind of that pre-revenue stage or that early of a stage. So we're going to apply a multiple based on earnings. And there's plenty of public and private comps you can find when you're trying to value a company. But in the end, that stuff doesn't even matter. I mean, everybody, involved here will tell you it's a negotiation, and it's especially interesting when you have multiple parties that really want the company, and it just comes down to what they're willing to pay for it. It's a free market.
Yep. Okay. Anil, any thoughts on valuation?
I hate to say it depends, but it really does, right? It depends on the type of market that you're working in, and I'm in the tech space, so it's valuations. I don't know if there's any rhyme or reason sometimes for some of the valuations, but yeah, it's really. I'd advise whoever is trying to sell to get the right advice and do the. To come in with the right structure and not be overinflated or under, right? You just want to be sure. So who's the best person to advise you on that? And that way you have a meeting of the minds, right? When it comes to selling.
Gotcha. So let's talk about deal structure a little bit. What maybe was your expectation going in, and did it change from your expectation when you actually executed? Just curious. For any, I'm going to do a jump ball here if anybody wants to jump in on that.
I mean, I'll go first. We, in our first deal, we were keeping an option available to sell the whole company if someone came out of left field with a crazy offer. But we did seek to mainly find an investor that would invest alongside us. In the second deal, we knew we wanted to sell the whole thing. not to get too technical, but the structure, was what we had thought it would be. Now that I'm making investments in companies, you do get creative. I mean, we're working on a deal right now where real estate will be, is valued as part of the deal. And, there'll be some equity swapping of equity in a company for ownership in real estate. So there's interesting structures that can be used in different cases.
Gotcha. Jamie, any ideas on that?
No, I mean, I think for us, the structure was pretty much what we expected it to be. Our expectations kind of going in and coming out, not as far as numbers and things like that, but there's just the overall structure of it. I think
Gotcha. So, and I'll ask this again to all three of you. What about the due diligence process? I mean, you hear horror stories about it, the data room. I mean, was there more focus on the financial aspect, or was it systems? I'll ask you, Jamie, when they kind of went in.
It was all of it.
Okay.
I mean, the systems, the diligence. I mean, the diligence is real. There's a lot of diligence, or at least there was for us.
And how long did that take you?
It took, the diligence part probably took us about 7 months. It was a long time, and we had people like dedicated to it. So just sort of back and forth, ticking and tying things out. And but yeah, there is you need to have sort of your ducks, be prepared to have all your ducks in a row before you enter into the process, is what I would tell you. Because you will have to be transparent and share everything about the business. And so that was an experience. I will just say one thing that came up in the structure that I didn't anticipate ahead of time was we did tweak some things because of tax implications. And so as an entrepreneur, I would tell you too, like, it's good to get tax advice on how a deal structure is going to impact you from that respect as well, to make sure you're structuring it in a way that is most advantageous to you.
Yep.
Can I add on to that, Tom?
Yeah, go ahead, Evan.
Since there were 10 years between my deals, a lot really happened in those 10 years. That the selling company now takes kind of a proactive approach to getting through some of the due diligence. So you're seeing quality of earnings reports paid for by sellers, and you're seeing the market studies, and some of this intensive due diligence work is occurring before you actually attract your buyers. Now they'll do their own, and they'll do plenty of it, but that's become a phenomenon. And I would also tell entrepreneurs, be ready to pay, because those things are expensive. Investment bankers don't work for free. Lawyers, accountants don't work for free. And actually running an efficient process and keeping your handle on those costs will put more money in your pocket at the end of the day. Those can get really expensive.
Gotcha. Thanks. Anil, anything to share on the diligence process? And, maybe from both a mentor and an acquirer standpoint? Yeah,
maybe just from a mentor standpoint,
Yep.
I would say that you've got to treat the entry into the whole process as though you're a public company. Imagine that you're a GAAP accounting public company, and you're going to go produce quarterly reports. So get yourself into that habit and drive that, and that's really that really enables that, right? So that's my one piece of advice. So don't wait for the investment banker to ask you to get all that information. Get yourself in the groove up front.
Great. Well, I know our time is starting to run out here, so I want to thank our panel. I don't know if we're going to open it up for Q&A for these folks or whatnot, but I'm going to kick it over to you. And again, thank you all for sharing your stories. I hope a lot of people learned, and I'm sure they did learn a lot from you tonight during our discussion. But congratulations to all of you. Really great stories to all. So thank you.
Yeah, really, really appreciate it. Tom, thanks for, guiding a really great discussion and really getting out some of these tactical points that folks need to know about. And Jamie, Evan, Anil, really appreciate you guys breaking down the landscape from your eyes and some of the decision-making that you guys had throughout that process. So Now we're going to say goodbye to the folks in the room that are there in person. So I know they're going to get into hardcore networking and really enjoy the wine and everything else that's going on. So good luck, Maya. I know you guys are going to start the networking. So for everyone that's here on Zoom, what we're going to do is we're going to segue into our breakout room sections. So we have split up the speakers. I think Anil, I'm putting you in the same room as Tom. So if you have to, sneak away, you can. I know you have another schedule. So we've split up the room very evenly. What we've done is we've been very thoughtful about industry relevance as well. So making sure that folks that are within the same industry are connecting. And then the leaders of each room are going to be the speakers. So I have, Jamie who's leading the room, Evan is leading a room, and Tom is leading a room along with Anil. And what we want to do is basically for the speakers, the member or the attendees, introduce yourselves, tell them who you are, tell them your company, and then tell them, kind of where you are at with your company right now. And then after that round robin is done, please go ahead and ask questions to the speakers and make it a synergistic discussion. I'm going to go ahead and open up the rooms now. You should see an icon that's popped up on your screen that says join breakout room. So if you guys can go ahead and click on that. Great, 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 great. Hey, Jared, putting you into a breakout room now. All right, everyone should have a notification to join your breakout room. Awesome, room 2 is good to go. All right, and then Shivani, Teresa, Uten, if you guys want to go ahead and enter into your room, that would be great. You should see a pop-up on Zoom. Teresa, Uten, Vivek, Uten, Shivani. Great, thanks, Shivani. Teresa, Uten, you guys there? Hey, Uten, you there?